Hi, and welcome back to the next Super and Pension module, in which we'll consider commencing a pension and then its ongoing management in Panorama Super. We'll focus on commencing a pension, managing pension payments, both regular payments and one-off payments, the annual pension review period, and moving from a transition to retirement to a full pension account. New pension accounts opened on Panorama Super are generally not auto-commenced, and instead an advisor has both the flexibility and control to instruct exactly when this occurs. The exception to this is account-to-account transfers, where the receiving pension account will commence immediately after the transfer request is processed. We'll cover this process in later modules. Your client's pension accounts that have not yet commenced will be easily identifiable, both in your overall listing of client accounts as well as in the actual client account screens. Please ensure you've watched the previous module and taken into account all the considerations during the period prior to commencing the pension, known as pre-commencement. Once all rollovers and contributions have arrived into the pre-commencement account and you are ready to commence the pension, there are a couple of places you can instruct this. The first is from the client's overview page. You can also access the same from the client's account details page with this tab, Commence Pension. This page alerts with a text box of relevant matters to consider, including ensuring all rollovers and contributions have been received, any tax deductions for personal contributions have been provided, and you have considered your client's transfer balance cap before commencing the pension. You'll see the current portfolio value, the tax-free component, and number of rollovers received. Click here if you need to further manage or view the client's rollovers and contributions. Regular pension payments will be directed to the bank account that was entered as part of the account opening process. The default frequency and payment date will be yearly and the next 10th of June as the first payment date. Click here to manage the frequency and payment date, choosing either the minimum pension amount or a specific dollar amount, which you may also index with these options. You have flexibility with frequency, choosing from these options, and you'll also select a start date for the first pension payment that may be as early as 1 or 2 business days after commencement. Click on Confirm Payment, review the details to ensure they're correct, then tick the confirmation box and submit it through. Further down on the Commence Pension page will be the Beneficiaries section. To manage these, you can click here to enter details for your client before commencing the pension. Please refer to the upcoming module in this course, which fully considers Panorama Super's beneficiary nomination options and the online process for submitting these. After you have received all rollovers and contributions, set up the regular pension payments and beneficiaries, and noting that any previously saved items will be removed, you can tick the confirmation box and select Commence Pension Now to trigger the pension commencement as part of Panorama's end-of-day processes. You'll see evidence that the pension has commenced, and the pension payment summary in the overview page will include a table that includes the pension payments year to date, the projected amount for this financial year and the minimum amount, as well as maximum amount in the case of transition to retirement pensions. You'll also find links for ongoing management of the pension that we'll consider further in a moment. The total value of the fund as at commencement of the pension will be reported to the ATO for purposes of your client's transfer balance cap, and the account will move from being taxed as in accumulation phase to being taxed in pension phase. As withdrawals cannot be made from a pension account in pre-commencement, and earnings and growth from investments can increase client balances, it is possible some clients could see their account balance grow above their transfer balance cap by the time they commence the pension. If your client has exceeded their transfer balance cap, it is then possible to commute a sufficient amount out of the pension as a withdrawal or roll back to accumulation phase. This commuted amount would be subsequently reported for transfer balance cap purposes to the ATO. to avoid the client having a taxation issue with a pension in excess of the transfer balance cap. Please contact the Panorama support team for assistance if this is the case for your client. After the pension has commenced, there will be the annual review process, which we'll consider in a moment. But you may also need to assist your client with regular payment settings and ongoing payments from the pension that may be classified as either additional pension payments or a lump sum. To do this, select Pension Payments in the left navigation menu for a client account. There will be two tabs, Payment Details and Linked Bank Accounts. You can view linked bank accounts, and your clients can amend these as required. We'll consider this in the upcoming video, What Does My Client See? In the Payment Details tab, you'll see a summary of pension payments for this current financial year, including year to date, projected for this financial year, and the minimum amount, as well as maximum amount in the case of transition to retirement pensions. Note the year-to-date figure includes a note that payments are reflected within 2 business days after submission. Any relevant warnings will also display, such as in relation to new minimums for COVID-19. Further down, you'll see sections for regular pension payments, as well as one-off payments. The regular pension payment details are summarised in the table here, including next payment date, the receiving bank account details, frequency, and amount. To manage or update the current regular pension details, select here. Make the necessary changes, including destination bank account, amount, frequency, and date details before confirmation and submitting through. The action icon also allows you to manage or update details in addition to being able to end the regular payment, assuming the minimum payment for the financial year has been met. You can also make one-off payments from your client's pension account. Select here to firstly choose the destination linked account. You have the flexibility to make the one-off payment as an extra pension payment or as a lump sum withdrawal that would not count towards the minimum annual pension payment amount. The available cash will be displayed, as will the percentage of the amount that will be classified as a taxable component. Enter a before tax gross amount, and there's a section for an optional description. Select Confirm Payment, reviewing details before ticking the box and submitting through for your client. The pension annual review process is required to calculate the minimum annual pension requirements for the new financial year and the maximum in the case of transition to retirement pensions, compare the current pension paid to the new minimum amount and also maximum amount in the case of transition to retirement pensions, and update the regular pension amount across the remainder of the financial year. The minimum and maximum amounts for the new financial year are based on the pension's account balance on the 30th of June. This is regardless of the client's pension payment amount that has been set, which might be a specific dollar amount that could also be indexed, minimum, or maximum. We'll compare the client's current annual pension payment amount just prior to the annual review with the newly calculated financial year minimums and maximums as relevant. If the annual amount of pension amount the client has been receiving is below the minimum or above the maximum for transition to retirement, the investor's payment is adjusted up or down to satisfy the legislative requirement for the new financial year. Annual pension statements and an annual Centrelink/DVA schedule will be placed into the client's document library as soon as they are produced and available. A transition to retirement pension will automatically convert from accumulation to pension phase when a client turns age 65. If a client is aged less than 65 and meets a retirement condition of release, they can access the Super Condition of Release form from Panorama's help and support, complete it and return it to us for processing to allow the transition to retirement to move from being taxed in accumulation phase to being taxed in pension phase. Panorama's help and support section contains guidance about commencing and the ongoing management of pension accounts with Panorama Super. And remember, you can always ask Panorama's virtual assistant Blue for help. So that's the end of this module, in which we've considered the commencement and then ongoing management of your client's pension accounts. We highlighted that you control the timing of pension commencements for your clients, and also outlined how further payments can be made as extra pension payments or lump sums. We look forward to seeing you for the next module as we continue the Panorama Super and Pension course.